Ever wonder how companies are making factories smarter, more efficient? Like, all those robots you see doing crazy things?
Yeah, it's pretty amazing, right?
Yeah.
We're talking about industrial automation, and today, specifically, Rockwell Automation.
Rockwell Automation. Okay, you guys sent in a ton of research on them. So obviously you're trying to figure out if ROK is a smart investment, and we're here to help you with that. We're going to cover everything from how Rockwell makes money to what Wall Street thinks about their future.
We'll even uncover a surprising fact about some of their recent acquisitions. It just might change the way you think about the entire industry.
So stick around for that. But first, let's start with the basics. What does Rockwell Automation actually do?
Okay. So at a high level, they're a global leader in industrial automation and digital transformation solutions, which basically means
Okay, but what does that actually mean? Like, paint me a picture.
imagine like a factory floor where machines are talking to each other, sharing data, making decisions in real time. You know, Rockwell provides the hardware and the software to make that happen. They help businesses optimize their production processes.
So they're basically building the factory of the future.
Yeah, exactly. They're at the forefront of what's called Industry 4.0.
Industry 4.0. Okay.
This like fusion of physical production with digital technologies, stuff like the Internet of Things, artificial intelligence.
So it's not just about building machines anymore. It's about making those machines smart and connected.
Exactly. And Rockwell has their hands in both sides of that equation. Their business is split into two main segments. First, you've got intelligent devices, that's the hardware side. Think sensors, motors, all the components that make a factory run.
Okay, so that's the brawn.
Yeah, and then there's the software and control segment. That's kind of where Rockwell really shines. They offer a whole suite of software solutions that help businesses manage their automation systems, analyze data, predict maintenance needs, even before problems arise.
So they're bringing the brains to the operation too.
You got it. And this combination helps them tap into big trends. For example, helping companies become more sustainable.
Okay, yeah, that's huge right now. Everyone's talking about ESG investing.
Exactly. So they're leveraging that to attract those ESG-focused investors. Okay. Now, let's talk about the people at the helm.
The management team. Yeah. What's the research telling us about Rockwell's leadership?
They seem to have a good track record, consistently delivering solid financial performance, a knack for anticipating market trends.
Yeah. I mean, they've been around for over a century, so they must be doing something right.
And they're committed to ethical business practices. They've been named one of the world's most ethical companies multiple times.
Okay, that's impressive. So they're ethical, they're experienced.
Correct.
But are they making smart decisions with the company's finances?
Well, they've been investing heavily in research and development, making strategic acquisitions, and returning value to shareholders through buybacks and dividends.
Dividends. Now you're talking my language. Tell me more.
Get this. They've increased their dividend payout for 16 consecutive years.
Whoa, 16 years in a row.
Yep. That's a pretty strong signal, don't you think? They're confident about their ability to generate profits over the long haul.
Definitely. It seems like they're playing the long game, not just chasing those short-term gains. But let's look at the bigger picture here. How is Rockwell doing financially, like numbers-wise?
Well, it's kind of a mixed bag. The good news is their balance sheet is strong and they've got good liquidity, meaning they have enough cash on hand to meet their obligations.
That's always reassuring to hear. But there's got to be some nuts of good news, right? What's the catch?
Their debt, it's been increasing in recent years.
Oh, yeah. I was wondering about that. Probably because of all those acquisitions we were talking about.
Exactly. Mostly due to those. It's not necessarily a red flag, if they're using that debt wisely to fuel growth.
But still something to keep an eye on.
For sure, for sure. Now, when you're looking at Rockwell's financial health, you want to pay attention to key numbers like market cap. That's currently sitting at $32.39 billion.
Okay. So they're a pretty big player. What about their price-to-earnings ratio?
Around 34.61. A little higher than the market average. Suggests investors are willing to pay a premium for their future earnings. But here's the thing. Their recent revenue performance, it's actually declined a bit.
Declining revenue. Okay, that's never a good sign. What's going on there? Is this a sign of trouble?
Well, that's what we need to figure out. Is this a temporary blip or a sign of bigger problem?
We need to get to the bottom of this.
We will. We'll look at the reasons behind the decline, analyze what Wall Street thinks about it, and figure out the risks associated with investing in Rockwell.
Okay, sounds like we've got a lot more to unpack here.
We do.
But before we do that, want to make sure you have all the information we're using. Links to all the research are in the episode description below.
Yeah, check that out. And while you're down there, let us know in the comments what stock you'd like us to cover next.
Oh, we are always on the lookout for new companies to analyze. All right, we'll be back in a flash to break down the rest of the Rockwell Automation story. Don't go anywhere.
We'll be right back. So, before the break, we were talking about Rockwell's recent revenue dip and how some investors are a little spooked by that. What are the main factors behind that decline? Like, is this a sign of bigger problems or just a temporary thing?
Yeah, it definitely caught my attention. We need to figure out what's going on there.
Well, one thing to remember about Rockwell is they operate in a cyclical industry, meaning their performance is often tied to the ups and downs of the overall economy.
That makes sense. When times are good, businesses are investing in new equipment. Rockwell probably does well. But when the economy slows down, those investments get put on hold.
Right. And the research you sent actually highlights another factor that's specific to the industrial automation world, something called OEM destocking.
Okay. OEM, that stands for original equipment manufacturer, right? Like the companies that actually build the machines and systems that use Rockwell's products.
Exactly. And destocking basically means those OEMs are reducing their inventory levels. They might be anticipating a slowdown in demand from their customers, so they're buying fewer components from suppliers like Rockwell.
So it's like a chain reaction. If the OEMs are holding back on orders, that could explain the revenue decline, even if the end users are still buying.
Exactly. It's a short-term bottleneck. That's why it's so important to look beyond just the headline numbers and try to understand what's happening underneath.
Okay, that makes sense. But even if there are external factors at play, doesn't mean we should just ignore it, right? What does the market think about all of this? How is Wall Street reacting?
Well, there's no real consensus. Some analysts are really bullish on Rockwell. They point to their strong market position, their innovation, their focus on high-growth areas like software and Industry 4.0. They think Rockwell is well-positioned for the long term.
So they're not panicking about this recent revenue dip.
Right. They see it as a temporary thing. They think as the economy recovers and those supply chain issues get sorted out, Rockwell will be back on track.
Okay, so that's the optimistic view.
Yeah.
What about the other side? Are there analysts who are more, let's say, concerned?
Definitely. Some are more cautious. They're concerned about the declining sales and rising costs. They also point to the fact that the industrial automation market is getting more crowded. New players are popping up all the time, especially in the software space.
Yeah, competition is fierce everywhere these days. So how do we gauge the overall market sentiment?
Well, one way is to look at what's called the short interest ratio. It basically measures how many people are betting against the stock, thinking the price will go down.
Okay, so a high short interest ratio, that's a sign of pessimism.
Exactly. But in Rockwell's case, the short interest ratio isn't super high. It's actually below the average for the S&P 500. So it
Right.
doesn't seem like there's widespread negativity among investors.
That's good news. All right, so we've talked about what Wall Street thinks, but let's zoom out a little bit. Who are the major players who own this stock?
Well, you've got your usual suspects, big institutional investors like mutual funds, pension funds, hedge funds, the big guys. And for Rockwell, a large chunk of their shares are held by those types of investors. Companies like Vanguard, BlackRock, State Street, they typically take a long-term view.
So having these big institutional investors on board, that could be seen as a positive sign, right? It shows they have confidence in Rockwell's future.
It could be. These investors do their homework before they invest large sums of money, so their presence suggests they believe in Rockwell.
But isn't there a potential downside to having so much institutional ownership? Like if they all decide to sell, wouldn't that drive the price down?
Absolutely. It's something to consider. Their trading activity can definitely create some volatility, especially if they decide to move in or out of a position quickly.
So that's something to keep in mind. Okay, what about insider ownership? How much stock do the company's own executives and board members own?
Now, that's an interesting question, and the research you sent highlights something that might raise a red flag for some investors.
Okay, I'm intrigued. Tell me more.
Insider ownership in Rockwell is pretty low, less than 1%.
Huh. What does that tell us? Does it mean that management doesn't have faith in the company?
It's not necessarily a sign of that. It might just be a reflection of their compensation structure, where executives are rewarded more through salaries and bonuses than stock options.
Okay, that's reassuring. But I get why investors would pay attention to that. It's always good to see a company's leaders have skin in the game.
Right. It shows they're aligned with the shareholders. Okay, so we've covered a lot about Rockwell, their business, their financials, who owns their stock, but we still need to talk about the risks.
Right. Every company has risks. How can we assess the potential downsides of investing in Rockwell?
One helpful tool is to do a SWOT analysis.
Ah, the SWOT analysis. Always a classic. For those who aren't familiar, SWOT stands for strengths, weaknesses, opportunities, and threats. It helps us systematically evaluate a company's competitive position. So let's start with the good stuff. What are Rockwell's strengths?
Well, they have a very strong brand and reputation. They've been around for over 100 years, they're a leader in the industry, and they have a global reach with operations in over 80 countries.
Yeah, they're a pretty big deal in the industrial automation world.
And they have a diverse product portfolio, too. They offer a wide range of hardware, software, and services, which gives them an advantage.
And they're known for being innovative, right?
Yeah.
Always pushing the boundaries of what's possible in automation.
Definitely. They put a lot of money into research and development, and they've been quick to embrace new technologies. Plus, they have a strong track record of generating good operating margins.
Okay, so lots of positives there. But what about the weaknesses? Where could Rockwell improve?
Well, those declining sales we talked about earlier, that's definitely a concern. They need to find a way to reverse that trend and get back to growing.
Yeah. And as we discussed, it might not be easy given the state of the economy and all the supply chain problems.
You're right. And another weakness is that their performance is tied to the health of those cyclical industries. If there's a slowdown in manufacturing activity, they're going to feel it. Plus, they're facing rising input costs, which is putting pressure on their margins.
Okay, fair enough. Now let's shift gears and talk about opportunities. What are some of the things Rockwell could leverage to really move their business forward?
Industry 4.0, it's huge. As more and more companies embrace this whole digital transformation thing, Rockwell is perfectly positioned to benefit.
It does seem like they're really pushing their software capabilities these days, which makes sense given where the industry is heading.
They're not just a hardware company anymore. They're becoming a software company. It's a big part of their growth strategy.
And what about emerging markets? As those economies develop and industrialize, they're going to need automation solutions, right?
It's a huge opportunity there. Absolutely.
Makes sense. Okay, so plenty of opportunities on the horizon, but we can't forget about the threats. What are some of the things that could derail Rockwell's success?
Competition is always a factor. They face competition from those big established players like Siemens and ABB, as well as smaller companies that are popping up in specific areas.
It's like a constant battle to stay ahead of the game.
And the technology landscape is always changing. If Rockwell falls behind in terms of innovation, they could lose ground to those more agile competitors. And then there are the usual suspects, the macroeconomic risks, geopolitical instability, trade wars, currency fluctuations. All those things can impact their bottom line.
Not to mention cybersecurity threats. As Rockwell becomes more reliant on software and data, they need to make sure their systems are secure.
No doubt about it. Cyber attacks can be incredibly damaging.
So we've looked at Rockwell's business, their financials, their risks. We've analyzed market sentiment, who owns their stock, and we've even done a SWOT analysis. What's the bottom line? Is Rockwell Automation a buy?
Yeah, it's tough to give like a simple yes or no answer. Investing is never that simple.
Yeah, definitely not. Especially with a company as complex as Rockwell Automation. There's a lot to consider here.
There is, but I think we've got enough information to help our listener make a good decision.
Okay, good. So let's break it down. What are the key takeaways from all this research?
All right, so key takeaways. Rockwell Automation is a leader in a growing industry.
Yeah, we talked about that. Industry 4.0, all that.
Right. But they do face some challenges, like their management team seems good, solid, but their recent financial performance...
Yeah, that revenue dip.
Right, that's a bit concerning.
So for our listener, what does this all mean? Like, should they buy ROK or what?
Well, based on everything we've seen, Rockwell could be a solid long-term play, especially if you really believe in the whole future of industrial automation thing.
Okay.
But you have to weigh the risks carefully. Are you comfortable with the uncertainty? Because there's always uncertainty, right? Can you handle maybe some ups and downs in the short term? That's something only you can decide.
Good points. And honestly, those are questions you should ask yourself before investing in any company. Really.
For sure, for sure.
But before we wrap up, I got to ask about that surprising twist you mentioned earlier. About Rockwell's acquisitions.
Oh, yeah. Remember how we talked about Rockwell making these acquisitions?
Yeah, they're buying up other companies, trying to expand what they can do.
Right. Well, it turns out they've been focusing a lot on buying software companies.
Really? So not just hardware, they're going all in on software too.
Exactly. It seems like they're betting big on the idea that the future of automation is going to be all about Software, data analytics, it's not enough to just build these really smart machines anymore.
So they want to take it to the next level.
Yeah. They want to use data to optimize those machines, make them even more efficient, and predict when they need maintenance.
Wow. So they're basically becoming like a one-stop shop for everything in industrial automation.
Yeah, that's a good way to put it.
Fascinating stuff.
And, this shift towards software, it has big implications not only for Rockwell, but for the entire industry. I think it's something worth paying attention to.
For sure. Like, how will it affect their competitive position? Will other companies follow suit?
Exactly.
Lots to think about. Well, I think we've covered a lot of ground here. We've looked at Rockwell's business, their financials, Wall Street's take on them, even those strategic acquisitions. I hope we've given our listeners some good information to help them with their investment decisions. It's important to do your own research before investing in anything.
Absolutely.
Yeah.
And hey, don't forget to subscribe to the deep dive for more deep dives just like this one.
We're always looking for new companies to analyze, so let us know in the comments which stock you'd like us to tackle next. Thanks for joining us, and happy investing.